You know how sometimes the market gets a story stuck in its head, a really confident narrative that everyone just believes is true? Well, what happens when that story suddenly shatters into a million pieces? We're going to walk through one of those weeks, a week where a bullish, optimistic setup completely fell apart.
So, let's start with this number, plus 3.28%. This is the number that was on everyone's mind. It's the S&P 500's average return for November, which is historically the single strongest month of the year for stocks. So, yeah, expectations were pretty high.
Exactly. Coming into that second week of November, investors were pretty much banking on this seasonal trend to continue. But, as we're about to see, the market had a totally different script in mind this year.
All right, so let's break down the setup. Why was everybody so confident as the week of November 10th kicked off? I mean, on paper, the conditions look just about perfect.
It really all starts with something called the November effect, and it's a real thing. It's this well-documented trend where a mix of holiday cheer and big money managers adjusting their portfolios for the year-end tends to give the market a nice boost. Think of it like having the wind at your back.
But the real fuel for the fire was this, that 41-day U.S. government shutdown, which was a huge drag on everything. It finally looked like it was ending. The second that news broke, it sparked this massive relief rally all around the world on Monday, November 10th.
But here's where it gets interesting. Even as all the headlines were screaming rally, there was a very different story brewing just under the surface. The optimism was real, but it was fragile, and the first cracks were already beginning to appear.
And this is where you see the first real red flag. In spite of that big rally on Monday, major indexes in both the US and in India were already falling behind their strong historical averages for the month. It was subtle, for sure, but it was a crucial warning sign that maybe this rally didn't have the horsepower everyone thought it did.
And you know where this weakness was showing up the most? In the market's biggest and most important engine, the technology sector. And this is where that bullish story really started to peel away from reality.
The anxiety was just building. This quote from an analyst later in the week really captures the mood perfectly. The very stocks that have been carrying the market all year long were suddenly looking shaky, and people were starting to whisper that scary phrase, a dot-com-style bubble. Then came the 1-2 punch. On November 11th, two very specific, very bad pieces of news hit the AI space hard. First, the mega investor SoftBank revealed it had completely bailed on its massive stake in NVIDIA. Ouch. Then, CoreWeave, a really critical player in the whole AI infrastructure world, slashed its future revenue forecast. These weren't just rumors. These were solid, concrete signs of trouble.
And this created this wild split in the market. It was like two different worlds. On one side, you had the Dow Jones, full of the older industrial-type companies, hitting a record high. But on the other side, the tech-heavy Nasdaq was stumbling badly. This told you it wasn't just a broad sell-off, it was a rotation. Money was actively fleeing tech.
So the market's on a knife's edge, right? That feeling of caution is quickly turning into real concern. So what was the final straw? What was the one thing that finally pushed it over the edge and turned a little tech stumble into a full-blown market collapse?
Well, the answer came on November 14th, and boy did it come with a bang. Well, a few things were happening. The single biggest bombshell came from the Federal Reserve, and it absolutely shattered what was left of the market's confidence.
It was truly the perfect storm. Yet three things hit all at once. First, a sudden dramatic change in what investors thought the Fed was going to do. Second, that tech wobble turned into a full-on reckoning. And third, to top it all off, a dose of really terrible economic news out of China. Let's break them down.
Okay. Look at this. This timeline just shows you how fast the floor fell out. Just 1 month before, the market was 96% sure that the Fed was going to cut interest rates in December. That belief was propping up everything. By November 14th, that confidence had completely evaporated, collapsing to less than a 50-50 shot. It was a jaw-dropping reversal.
And bam, as soon as that Fed story flipped, the little stumble in tech, it turned into an absolute rout. The biggest names, the darlings of the AI boom, just got hammered. We're talking sharp, painful, one-day drops for NVIDIA, Tesla, Palantir. The leaders were now leading the charge straight down.
And as if that wasn't enough, the third blow came from overseas. Economic data out of China for October was shockingly weak. I mean, look at this. Retail sales, industrial production, investments, all pointing to the same thing. The world's second largest economy was seriously losing steam and fast.
So the storm hits. And when the dust settles, the entire landscape has changed. That optimistic, risk-on feeling from Monday was just gone. It was replaced by a defensive, risk-off crouch.
And the damage was everywhere. Global stock markets took a nosedive. The riskier stuff, like Bitcoin, it crashed. And then you start to see the real-world impact. Verizon announced a huge round of layoffs. And in markets like India, all that foreign money that was just starting to come back in, it turned right around and fled.
And to make things even crazier, remember that government shutdown? Well, it left behind this really weird problem. Because of that 41-day closure, key economic numbers for October, we're talking crucial inflation and jobs data, were just never collected. It left the Fed, and frankly the entire market, flying blind in a total data vacuum.
So, what's the big takeaway? It's that the whole story, the entire narrative the market was telling itself, just changed completely. It was no longer about seasonal strength and shutdown relief. Suddenly, the story was dominated by Fed uncertainty, a painful sell-off in tech, and real fears about a global slowdown.
Which leaves us with this one last thought. The whole week started with everyone leaning on the historical strength of November, but when the fundamental story changes that fast and that dramatically, it really makes you wonder, is history still a reliable guide at all? Something to think about.